Hello everyone, that new intro brought to you by one of our members, Julian. His company is Kinetic Cuts, so if you have any interest in any intros or video or any of his stuff, that's the place to go to give him a shout. So I'm currently on some hotel internet, so I'm going to keep it short and sweet and cover these 4, otherwise it would take about 3 hours to upload the video. If you did not watch the video from yesterday, I highly suggest you do. It's a good example of going over a game plan and laying out what we anticipate to happen and then being able to react to that when things are fast and speedy first thing in the morning. So yesterday, what we were looking for in summary was for a name like CGC to hold its low because it had a lot more space to work with a long lower wick and a close far above the low of yesterday. So I was highlighting how the ideal scenario for me on the hourly time frame with extended hours on would have been to pull back, come down towards the low of yesterday, for the bulls to say, nope, we're not going any lower, buy that dip, and then break the hourly lower high of key resistance 46.75. So that played out pretty much to perfection. The low of the day was 44.80. We held that support by 17 cents. That's a bottom fishing play. And it's, again, the kind of thing where you react to that and say, okay, we stopped at the low of the day. The bulls started buying the dip. Even if it's over $45 at that point, you buy in and you put your stop below the low of yesterday. That way, if you're wrong, you get a small loss and you're out of the trade. And if you're right, you get a big win. I personally today was on my way traveling, so I did actually end up flipping CGC and Cron 4 times total bullish and locked in those gains before hitting the road. But as far as the setup, we were looking for the other names to potentially hit lower lows, and that was because we closed weaker and we didn't have as much space to work with. So it might be hard to look to buy after hitting a lower low, but we knew to be looking for daily higher lows to form. We knew to be looking for hourly trend changes, and CGC is the perfect example. So for CGC, we had the strong start of the morning. We hit our new resistance level of 47.89. Then we pulled back and formed an hourly higher low. So once we lost the 5-minute uptrend from the morning bull move, we said, all right, now we're looking for an hourly pullback, an hourly healthy consolidation. So this support was down at 47.07. We then saw, and this is exactly a perfect example 2 videos ago where I talked about the probability scenarios on the daily time frame. This is the psychology of a big, strong bull move, a pullback, the bulls saying, oh man, I missed that run. Let's buy this consolidation. The bulls attempting to see continuation. Perhaps the bulls that did not take profit initially started to take profit, and then we dropped down to the lower low. This is the scenario and the psychology of one of the possible outcomes on these daily charts. The other possible outcome would be continuation. So we pulled back. As soon as you lose the 5-minute uptrend, you zoom out to the hourly and say, all right, hourly consolidation is underway. We formed the higher low, and now we're in a tightening range as we head into tomorrow. Key short-term resistance is 47 and then 47.89. And support, we're looking down at 46.11 and 45.76. If 45.76 breaks tomorrow morning, that's a red flag on this bounce. That loses momentum and it shifts the trend on the hourly back to the bears. If we can hold 45.76 and break 47.89, then we'll say, yes, our daily higher low has been established and we're making our way back up towards the recent high at 51.81. So bulls have to hold that hourly support level that was created this morning and then see that continuation. It was also a little bit tricky to try and look bullish because SPY broke bearish pre-market and it saw a gap down open. But this is the kind of scenario where the amount of bull volume that was coming into this sector outweighed any correlations that we had with the S&P 500. And then once that volume dries up a little bit, then those correlations strengthen again. So when you have high volume, you break correlations because your volume overpowers whatever any of the algos or bots are doing. When you have low volume, that's when correlations are stronger because it is the automated trading that is doing the majority of the volume as opposed to retail traders. So looking at Cron had a gap down open. The hourly RSI was low to start the morning. And for CGC, the hourly RSI was right at 30, right at oversold. So for Cron, bulls bought instantly on the open. And we just saw little 5-minute higher lows and higher highs. Actually, that's later in the morning. So gap down open. And it was actually a rocket ship on Cron where we just saw huge follow through and very little slowdown. We pulled back, and there's that same lower high and lower low on the 5-minute time frame that indicated hourly consolidation was coming. We look at the hourly time frame, and we have a higher low that formed. So the most important support level into tomorrow is $20 on the dot. break $20, and it's a red flag that we have lost momentum and the bulls did not get the follow through. We did get a new high of the day right at the end of the day, only by a couple pennies over 21.38, but that's an hourly trend change confirmation of a higher low and higher high. We just need follow through tomorrow. So resistance is going to be from here, 22.23 is the next level that stands out to me. It gave us a really nice 15-minute equilibrium, and I was watching it from the plane as we sat on the runway, knowing that it was going to be a really easy trade on this bull break. But we had a high, low, lower high, higher low, bull break into the end of the day, and bulls are going to try and carry that momentum into tomorrow as well. ACB, also seeing a daily higher low established, so don't forget the low of today now on these names, that's our daily higher low. And if we don't get follow through from here, again, it's a red flag that weekly consolidation would be coming. So 1872 is now a key daily support for Cron. CGC, that double bottom on the daily, is a key support down at 44.63. And for ACB, our daily higher low is now 728. So the play for ACB, very similar. We did break the low of yesterday. ACB was more comparable to CGC in terms of how much we bounced from the low of the day yesterday. So bulls had space to work with. We broke support by a couple pennies, but then bulls instantly bought that dip as well. The hourly higher low, most important support for me, is 755. And we didn't get back to the high of the day here. So we're in a tightening range similar to CGC. So already just looking at these three, I can say that Cron is clearly the strongest because the hourly time frame gave us a higher low and higher high and a strong close at the end of the day. CGC, we had the hourly higher low, didn't get all the way back, so only made it about halfway on this hourly range. And then we look at ACB, and it too made it a little bit more than halfway. So I'd say ACB is slightly stronger than CGC on the hourly time frame, but very comparable. APHA, daily higher low, we're not confident it's set just yet. We didn't get enough bounce off of this level. 907 is support. You can see the volume is still declining. Let's compare it to the other names on the volume, and lower volume on CGC, ACB, lower volume, but pretty much the same as yesterday. And Cron, increased volume. That stands out. So Cron, clearly significant bull volume with a significantly bullish candlestick. And APHA, let's see what the hourly looks like compared to everybody else. We had the low, the high of the bounce, higher low at 932, and then we formed a lower high at 969 and couldn't get much follow through. So I'd say APHA is the weakest on the hourly time frame, just comparing these individual names. The 15-minute, we can see that we never really broke any key resistance on this 15-minute time frame. 969 and 989 are two key levels into tomorrow, and bear breaks would be at 947 and then 932. It all depends on how many details you want. If you look at the 15-minute time frames, you can get more support and resistance levels. If you want to keep it simple and a longer term scope, perhaps if you're looking for swing trading, you're looking at the hourly time frame, and the higher lows are established, and those are the must-hold levels into tomorrow. Again, red flag for the bulls if those levels were to break, and we have to break the highs of today tomorrow on APHA, ACB, and CGC to get follow-through on this hourly trend reversal to give us confidence. SPY saw some weakness today, like I said. Have to see if that's going to follow through to further daily consolidation, but all in all, the bulls very pleased with how the start of today completely disregarded some significant SPY weakness, and it was probably the most significant SPY weakness that we have seen in the last couple of weeks. So again, good sign for the bulls to be able to disregard that. And we did bounce at the end of the day on SPY, and the daily chart is still bullish, and that's a nice long lower wick. So bears don't have a lot of follow through right now on the S&P 500. That's where we stand. I hope you all could do some good things today, and then I'll see you tomorrow.
Yeah, bud. What are you doing?